Welcome back. The market is closed and the numbers are in. Let's get more on the markets. Look at that. Down nearly 2%, 63.37, the worst performing market in the region, failing total above 65. Total value 20.8. But if you take out the extraordinary block sales, I think value turnover is just about 7.5 billion. Decliners being advancers 2-1. The broader all shares also sold down 1.6%. What is happening in the market? We have someone here who seems to be beating the market performance, at least. Jon Lim, co-founder and CEO of DragonFi Securities. Hi, JC. Welcome back to Market Edge. Great to have you here in the flesh.
Absolutely. You know, every time we get a call from ANC, we clear the calendar.
Thank you so much. So before we get to outperforming, to beating the market performance, what's happening here? I mean, why the bloodletting? Why is there blood on the floor today?
So it's actually not surprising. The PSEi recovered most of its losses early in this year by wedging higher and meeting the 200-day moving average yesterday. And it was rejected by this long-term moving average. And from my perspective, given that the lead markets such as the US and certain European countries like Germany are already extended, I don't see any near-term catalyst that will enable the PSEi to punch through convincingly above this long-term moving average. So my guess is it's going to tread sideways over the coming months, looking for a positive catalyst.
Which could be?
Well, interest rate cuts. Right, but it has to be synchronous throughout the world. It cannot be a Philippine-led interest rate cutting environment. We need something sort of like something that will stimulate the risk-on environment globally, as opposed to idiosyncratically with the Philippines.
You mentioned the long-term moving average, which is what?
The 200-day moving average.
And that is what level are we talking about?
So that stood around the 6.4 level. 6.4 level. So the PSEi met it 2 days ago and was swiftly rejected. So it wasn't surprising given the manner by which it reached the 200-day moving average, which was a gradual ascent. So usually when you have a gradual ascent, that means that there's less conviction in the move, as opposed to, let's say, something that is more robust, wherein you have really long bars moving upward. So, which brings me to my next point. So, currently the PSEi now is down around 2.5% for the year. This continues a trend of sideways movement that we've experienced. It's a range-bound movement that we've experienced since 2021. So outside of 2022, wherein the PSEi was down around 8%, the PSEi was actually up or down between 1 to 2% in 2021, 2023, and 2024. And because of this comatose action, this has taken a lot of flack from market participants, but actually this obscures the fact that there have been a lot of profitable opportunities beneath the surface, specifically in a subset of stocks known as dividend growth stocks.
All right, now we're going to segue to how you beat the market using the dividend play. So we have a graphics here. Let's talk about maybe the performance chart.
Sounds good.
There you go, D15 performance.
All right.
So walk us through this chart. What are we seeing?
All right. So our research team in DragonFi, led by Franco Fernandez and Jared Tin, actually ran a fundamental screen focused on dividend growth, dividend safety, and earnings power to arrive at what we call the D15. So essentially, it's the top 15 dividend growth stocks in the country. As you can see from this graphically, it has outperformed not only the PSEi Total Return Index, but also the PSEi Div-Y Index, which focus solely on dividend yield, which is not really the right metric to focus on when you're talking about dividend investing. What you really want to do, dividend yield provides the floor, but it's dividend growth that supports higher stock prices. So you need to marry the two metrics in order to really have a more sustainable portfolio.
So let's look at your portfolio. Who belong to the D15? Who are the members of your D15? For those who are curious, there you go. We have a chart as well.
Yep. So the D15 obviously is comprised of the dividend growth stalwarts, such as Meralco, Metrobank, ICT, BPI, among others, right? These are the stocks that we believe can outperform going forward. But we do rebalance this every now and then as we get fundamental data.
All right, and we have a third chart here.
Yep.
If we could just switch it. There you go. What does this chart tell us?
So the stat here is even more compelling when viewed from the lens of numbers, right? So as you can see that in 2023, the D15 actually outperformed by a wide margin the PSEi and the DivY index, rising 4.25%. This was followed by a 37.54% increase, and is currently up around 3.15%, given today's drawdown, given today's market drawdown. But this is far from a theoretical exercise. I think I mentioned to you before, I've been championing dividend investing every time I was taking note. Yeah, go ahead. So this is far from a theoretical exercise. As I mentioned before, we actually manage the dividend harvest portfolio to guide our clients. So the D15, the methodology is based on the dividend harvest portfolio, which mirrors my personal account. As you can see, we started the dividend harvest portfolio in December of 2023. So in that 1 month, it immediately outperformed by gaining 2.12%. But over the next 2 years right now, in 2024, it returned a total return, including dividends, of 23.24%. And the year-to-date returns right now is around 24%.
These are just dividends?
Both dividends and capital appreciation.
Oh.
Yes. So
from the D15.
From the D15. So essentially, the D15 is an outgrowth of our own dividend harvest portfolio.
And if the D15 has been outperforming for so many years already, what are the chances it has run its course?
No, I don't think so. So I trade both. I actually invest in both the U.S. and the Philippine market. You actually necessarily have to conform to the market that you're investing in. In the US, it's more growth style investing, right? But in the Philippines, because it's comprised of oligopolies and monopolies that do provide dividends, you have to play to its strengths. And the way to play to its strengths is by way of dividend growth investing. So unless we have a repeat of the 2019 to 2015 Pinoy bull era, I think the way to play a consolidating market, a range-bound market, which I believe the PSEi will be even in the foreseeable future, is through dividend growth investing.
All right. And when do we exit that range-bound trade era, you think? Because everybody who's trying to look at the market is saying, you know, the index is back to where it was 10 years ago.
Yes, I agree. Yep. So, okay, let me tell you, let me give an anecdote about this. So before coming back home to the Philippines for good in 2012, I attended University of Chicago alumni event in New York City. And I was speaking to a managing director of Deutsche Bank back then in New York. And he was telling me, he didn't know I was from the Philippines, but he told me, you know what best performing market is going to be in 2012? It's going to be the Philippines. And I coyly, inquired why that was the case. And he mentioned everything that, the narrative of a highly educated population, a young working age population, the Pinoy administration pursuing, let's say, good governance and all that. So my point to all this, it took, let's say, the perfect storm, a confluence of really positive narratives for people to recognize the
Potency Plus C every day. Mahalagang paalala, ang Potency Plus C ay hindi gamot at hindi dapat gamiting panggamot sa anumang uri ng sakit.
The global financial market, wherein the investor has a choice, right? When the investor has a choice, you need to make it compelling. Hence, that's why I've always believed in the power of pera. So, yeah.
Moving on to pera, but before pera, si MEPA first.
Yes.
Do you think it's enough to move the needle?
Yes, but it's not the type of movement that you would expect a dramatic near-term catalyst, but it's something sort of like when you lay the groundwork for a long-term sustainable infrastructure that can really deepen the capital markets. So I actually attended the CIMEPA public consultation event like 3 weeks ago, and I must say, inspired leadership on the part of the Interagency Pera Task Force in CIMEPA, which comprised of the BSPs, SEC, and the BIR. So they included there a stipulation wherein if corporations contribute to the pera of their employees, they're entitled to an additional 50% expensable line item in their gross income. I believe, so I really commend the Interagency Task Force for shepherding the pera into its current potent state. I really believe that this is the start of something, and DragonFi is really honored to be the first SEC accredited pera administrator.
How's the pickup?
So Pera will launch in DragonFi this coming September, but we've already laid the groundwork ahead of the curve. We've been speaking to all the major corporations in the country, Procter & Gamble, Mondenissen. The interest level is very, very high because you really see the value for both the employee and the employer. And I've committed to the BSP that we will really drive mass adoption in the same manner that DragonFi is driving mass adoption in our own investment app. So just a little bit of self-promotion.
Go ahead.
I'm sorry, but DragonFi is now easily the fastest growing investment company in the country in terms of value traded and the number of clients that we acquire on a monthly basis. So DragonFi right now is acquiring at a run rate of 11,000 clients per month. And these are real clients. I know the wallets, they keep on talking in terms of the millions of PSE accounts that they are able to open, but the millions of PSE accounts that they open have zero balances. In our case, it's actual clients, and it is reflected in the value traded performance of DragonFi. So, and we've done it by really deploying the most cutting-edge technology.
So
to
much
make
has
investing
happened,
seamless.
JC, from
yes,
the first time
we
were
met.
talking about the launch of DragonFi.
Correct.
All right, so many things, so many positive news flows. Clearly that they're keeping you excited.
Yep.
They're keeping you very bullish about the future. Are there, you say we have to offer a compelling narrative so people will invest.
Yes.
Are there compelling corporate narratives that you are watching very closely, whether noisy news or under the radar stories that you think could actually help move the needle?
Okay, more on the noisy part.
More on the
noisy part. So obviously we've been seeing that, let's say, the online gambling firms being sold down on account of the political narrative, right? But my sentiment here is that it actually provides an opportunity for long-term investors to buy.
At attractive prices.
At attractive prices. The reason being...
So gaming's not dead.
Gaming, it cannot be dead. Why? So we've already kicked out the POGOs. So that was a source of fiscal revenue for the government. You take away online gambling, then we don't have another fiscal alternative. Secondly, if you really want to take out online gambling, you're just going to push it into the
the black market.
The black market, right? So the main rather the ideal approach is to really enforce regulations and create regulations that protect consumers rather than an outright ban. You're never going to do that. You see the United States embracing online gambling because of all the deficit spending that accrued on account of the pandemic. We need to again, without
we need
a fiscal,
revenue.
We need the revenue. Outside of a fiscal alternative, it's impossible. I don't think you can ban that.
What about IPOs? Because the PSE just raised their target for capital raising this year to about 186 billion, I think.
Yep. I love that question, Mimi. Thanks for asking that question. So, I'm not a fan of expanding IPOs.
Really? And why is that?
I'm not a fan. I've never been a fan.
Because?
All right. So when it's clear, the data is clear. Let's say you look at the developed markets like the US. One of the surest signs of a market top is when you have a deluge of IPOs listings coming into the market. Why? Because you have a bunch of merchandise that requires capital to chase it. So it actually engenders selling in other holdings to be able to participate in those IPOs. The current state of the PSEi, wherein it's still illiquid, by expanding the pool of securities traded in the PSE, you're actually exacerbating the liquidity issues of the PSEi. The way to attack this is to first deepen the capital markets, and that's where PERA really excels. Because if you look at the U.S. market, 13 trillion out of a $50 trillion U.S. market cap comes from their retirement accounts. It comes from their 401ks, Roth IRAs. Why? Because it's tax advantage. You need, as I mentioned before, you need a compelling argument to buy Philippine stocks.
Okay.
And that's by way of making it tax advantage.
All right. On that compelling note, JC, thank you so much for joining us.
Thank you,
we hope to see you soon.
Yep. Always available as far as ANC is concerned.
All right. Thank you very much. We're taking a quick